Hi, I'm Jamie, Small Business CFO at Bloom. I take business owners understand their numbers, take control of that cash flow, and avoid financial traps that catch so many people out. If you think your accountant is liable if something goes wrong in your business, you would be wrong. It's actually the director. So in Australia, too many small business owners believe that if the books aren't right, the accountant will take the fall. But under the Corporations Act, directors are legally responsible for the accuracy of their financial reports and the health of their company. Today, I'll break down exactly what that means for you as a director, common myths that cash people out, and how you can protect your business while running your business. What does the Corporations actually say? As a director in Australia, you are bound by what's called the Corporations Act. And that means that you are personally responsible for ensuring your company keeps accurate financial records. It means you are personally responsible for signing off that the financial reports are correct. And you must ensure that your company pays the right taxes, superannuation, and meet the solvency requirements. In simple terms, if something goes wrong, the ATO or ASIC won't be chasing your accountant first. They're actually going to come to you as the director. A common myth I hear all the time is, oh, my accountant made the mistake. It's their fault. It's not my fault. But here's the truth. The accountants are the service provider. They work with the data that you've given them. And if that data isn't correct and you haven't signed off correctly and looked through that data correctly, then that's a problem. If you sign a tax return or a financial statement, you're effectively saying, I reviewed this and I confirm it's correct. Even if the accountant has prepared it based on the information that's given, the responsibility will still fall on you as a director. Let's go through a mini example. Let's say your bookkeeper codes a personal expense to a business account and the accountant misses it. If the ATO audits and finds it, you as the director are the one who signed off on those accounts. So you're the one that would have to back pay the difference at a minimum. What is the director liable for? The director's duties covers more than just tax. You're also responsible for ensuring solvency, which basically means that the business can pay its debts when they fall due. They are responsible for accurate record keeping. So every transaction, every bill, every wage that needs to be accounted for, you've got the documentation to support it and you agree that it's correct and the dollar amounts are correct as per the Fair Work Act. You're responsible for lodging on time all the paperwork. So that's as tax returns, super, and if they're late, it's the director's penalties. Employee entitlements is superannuation guarantee, PAYG withholding, workers' comp. All these things are not optional. Failing in these areas can lead to penalties, personal debts, personal liabilities, or even director bans. Ways that you can protect yourself. So what can you do as a director to protect yourself? Here are 3 practical steps. Stay informed. Don't just sign what your accountant or lawyer puts in front of you. Ask questions, review reports, and understand what the numbers are actually saying. Make sure everything's up to scratch with your contracts and employees and you're paying them everything that they're owed and all their entitlements and allowances. Maybe book in monthly or quarterly reviews with your accountant or a virtual CFO. This can go through your cash flow, tax savings plan and forecasts, and you can also chat through anything that may come up. A tax savings plan, always set aside some money for GST, PAYG, and company tax. And the workshop is not having enough of this put aside. Remember, you don't need to be an accountant yourself, but you do need to understand enough to make informed decisions. I would also highly recommend doing a director's course if you're feeling really not comfortable with all these items and being on top of them. If finance isn't your thing, that's fine. Just don't ignore it. Get some support. Book monthly reviews with your accountant, work with a virtual CFO, or invest in learning the basics of a director's course.